If you're a mortgage loan originator and you have never had a loan denied, I may argue you're not trying hard enough. But if you're a mortgage originator and you're consistently having loans denied, then I am going to tell you, you got to do better. In today's episode, JC and I are going to do a deep dive into the slippery slope known as mortgage loan denials. How many is too many and how many is not enough? Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's poppin'?
Hey, I'm wearing the new TLOP coaching shirt. You see the purple?
I do see that.
Yeah, I was leaving the house this morning and Michelle's like, ooh, I like that purple.
Purple means learning now, apparently, or something?
Yeah, look, now that we are, TLOP is a brand, we know we're keeping orange for the podcast, purple for the coaching company.
There you go.
Yeah, I'm digging it.
That does look nice.
Yeah. Thank you so much. Yeah, thank you to Steven who helped order these shirts. Is it a
Nike shirt?
It's Nike.
Okay, just making sure.
Yeah, no, that's all I wear.
Clear, you don't wear Adidas with Nike, Dustin?
Negative.
How dare you? How dare you?
We talked about that last episode, John.
Oh, yeah, I started my new wardrobe. I'm going to start wearing all black like these tech losers. I ordered like 4 just plain black T-shirts.
Did you really?
That's how I'm going to dress.
You know what is so funny? I saw a picture online this weekend from a big event that was in Dallas that I think was heavily mortgaged.
And let me guess what they wore.
Dude, all 4 of them. Jeans, black T-shirt, and some kind of a super expensive, fancy, tennis shoe.
Oh, my God. They're such fucking...
Like, it is like literally as if there was a wardrobe or like a uniform.
A memo that went out. You must wear this now.
Yes.
I do hope you know that. Like,
is that why I'm not like
parents? I hope you realize that just because of people like y'all mortgage people who think you look cool wearing J's in your suits, you're like the reason why people don't wear J's anymore. And they're not worth anything because you guys think it looks cool. You guys look like clowns. So
well, thank you for that because I like wearing my J's.
Yeah.
No, it's all right.
I'll give you a pass because
I don't do it every day.
Yeah, you don't do it every day.
But I can. I mean, look, that's the problem when things go mainstream in general.
It's so corny.
Like music, when music goes mainstream, guess what? I don't like it.
I turn it off.
Yes,
music sucks. Movies suck.
Well, I quit watching movies because there's nothing but Marvel. It's all Marvel or their remakes. Like there hasn't been a good, new movie in decades.
In decades,
literally in decades.
Sir. Yeah.
And don't get me wrong, those Marvel movies are entertaining, but there's nothing new about them. There's nothing to get excited about.
Trash.
And I can see, yes, where the cool hipsters were wearing J's 5, 7, 10 years ago. And now that 46-year-old dads are wearing them.
Now it's like, no, now I'm going to wear fucking Doc Martens now or something.
The kids are wearing Doc Martens and Birkenstocks. They're both in, John. They are both in.
Y'all ruin everything.
Who's y'all?
Just people out there in the ether, in the ethos. They'll be ruining everything. Fuck.
Yeah, but I mean, we're not going to go down this rabbit hole because people already think that we,
No, I love it. I love it when I shit on people's cities and they're like, I actually love that city. I'm like, okay. Still trash.
You said that you're going to start rocking the black T-shirt. I can't wait to see it.
All black is going to be such an easier thing. Knowing that I have all these clothes, I got all these J's, I'm just going to start dressing like a straight European from Paris. I promise you, Dustin. That's like the next calling in life. Yeah,
but I do want to know why the jeans with black T-shirt is like the go-to
because
look.
It's slimming and they think they look like provocative and they think they look like they're doing a TED Talk when in reality they just have low self-esteem and they're a turtle inside.
Do you think it comes from like Steve Jobs? Was Steve Jobs one of the first guys to want to rock the
T-shirt? And then
T-shirt?
that Theranos chick who scammed everybody. By the way, I don't understand how people get scammed by these people because as soon as they say hello, I can tell like this bitch is weird as hell. Like I don't understand how you could get conned by someone who's so on the spectrum.
Maybe that's your mark in life, John. Maybe you can pimp yourself out to be everybody's conscience. You'll be like everybody's gut. Like, you don't have a good gut. Don't worry. Just hire JC.
Yeah, just tell JC what the problem is, and I'll give you a common sense answer. Probably because you're poor and you eat at Outback Steakhouse.
Probably not.
When's the last time you went to Outback, Dustin?
I bet my family and I go to Outback at least once a year. At least, yeah, there's like 2 of them right down the road.
To cleanse the palate, yeah, because, you can't have, filet mignon every day. It's good to cleanse the palate with a good old Outback. You get a bloomin' onion, too?
Probably.
Jesus.
Yeah.
Middle America.
What's wrong with that? So I'm going to have this major self-conscious. So I dress like I dressed today, which I was putting on my clothes, and I'm like, oh, straight up dad. Straight up dad.
Why'd you put that on today? You come to an office with nobody here, but you got dressed. You're like that old woman who gets dressed on a Saturday. Where you going, Ethel? Nowhere.
Can I tell you a true story?
Yes.
My wife and I were so hungover yesterday that we did no laundry. And then this morning when I was getting dressed.
Yeah, it's called put on dirty clothes. What the fuck's wrong with you?
I was getting dressed. I didn't have any jeans. My 2 Lulus, one I'm packing for our trip to Greenville.
Oh my God.
And I wanted to wear socks today. And a lot of days if I'm wearing my Lulus, I'm wearing them with slip-ons, which means I don't wear socks.
Are those Tom James pants?
I have no idea.
Damn.
They're just slacks. Y'all can't see, but they're slacks and a polo.
Remember you used to give Tom James so much money every quarter. Now that relationship dried up.
Well, it dried up when the mortgage industry dried up. I'm waiting for those fat checks to start rolling back in. John, it's been 4 years.
Oh, yeah.
Slow your roll.
Yeah, you're right.
All right, let's get into today's episode.
Go ahead.
All right. Well, hey, before we get into today's episode, how about first a word from our sponsors? Today's episode of the Loan Officer Podcast is brought to you by our friends over at Capital W Collective, the first and only organization uniquely dedicated to educating, elevating, and empowering the leaders of today and tomorrow within mortgage capital markets. Capital W is dedicated to the 3 E's: educate, elevate, and empower. While increasing female representation within the mortgage capital markets is a Capital W goal, the organization wants everyone to participate. Capital W has already received amazing support from women and men, aka women and their allies. Capital W is a 503c that relies on generous donations and contributions of individual and corporate donors. Make sure you check out Capital W's LinkedIn page. It's Capital W, which is one word, collective. And their website is capitalwcollective.org. Capital W is also actively seeking marketing and education committee members. So get involved today. And we're back.
Okay, so go ahead. Let's talk about getting denied, my favorite thing in life to do.
How many times have you been denied in your life?
Are we talking about quite often, actually?
Is this going to be like a therapy session?
Fuck no. I don't need therapy. Talk to a stranger to tell me about my problems when they already got problems of their own to digest. That's a whole nother rabbit hole.
Okay.
Denied. Yeah, actually, I did get denied by your alma mater.
UCF denied you?
You can't finish, said you can't come here. So then I had to go to Eckerd College, and I was like, get me the fuck out of here. Then I was going to go to USF. Thank God I didn't. And I ended up in the best, what I would say, college in all of Florida, if not the entire country, University of Tampa.
What's their mascot? You don't even know.
A Spartan.
Is it really?
Yes, it is. Type in ut.edu and see what college it takes you to. I rest my case.
Why is that?
Because it's not University of Texas, Toledo, or Tennessee. It's Tampa.
Oh,
yes.
Nice.
Shout out my boy John Sykes.
Although you're wearing a USF green
No,
pullover.
Dustin, unlike you, this was dirty. I went rollerblading in this 4 days ago, and I threw it back on. So if I smell like sweaty balls in a taxi cab, it's me.
John, you smell like dank every day.
Thank you.
Yeah, that's what you smoke. You smell like the flower you smoke
I know.
every
Is
day.
it legal in Greenville? I'm gonna travel with it anyway, so it doesn't
Oh, you
matter.
know what? Nicole Robinson,
Okay.
who is up in Greenville that we're going to go and hang out with.
Nicole
one of the
Squared.
two Nicoles.
Nicole
Yep.
Squared.
She sent us, I meant to bring it in and share it with you. She told me I have to share it with you.
Okay.
It's a THC-infused seltzer from one of the breweries in South Carolina.
Oh, okay. Look at her drug trafficking ass. I like that.
Yeah. So I'll have to bring that in next week. But she had it sent to my house.
Thank you,
so
Nicole.
thank
Have you been
Nicole.
denied?
Yes.
From what?
My biggest and first denial was I wanted to go into AmeriCorps coming out of college. And my cousin had done Peace Corps. I thought that was awesome. She had an amazing experience. But I was like, why do I want to go outside of my country when there's so many people inside of my country who need help? And AmeriCorps had many ways that you could be a part of their program, but only one was badass. And if I'm going to do something, I want to go the badass way, where I was going to literally be a part of a small group. We were going to every 6 months move to like a new part of the U.S. It could be the Appalachian Mountains. It could be up in the reservations in South Dakota. It was like usually impoverished areas where we're going to be able to come in and help with infrastructure, with education, et cetera. And they told me I wasn't good enough. They told me that my essay and my recommendations and my resume wasn't what they were looking for. But they had an opportunity for me to volunteer locally if I wanted to stay in Orlando and spend my Saturdays working at a food bank. Yeah, and I was like, you know what? That's not. I was up for the 2-year adventure. I was up for like living in campgrounds and like immersing myself in these impoverished areas as a way to really not go get a real job, but also as a way to kind of pay it forward before I started my adult life. So that was probably the one time that stands out when I was like denied. But we're talking about loan denials, and we're talking about loan officers and mortgage brokers.
Yes, here's where I get to deny my paying attention skills. Go ahead.
Okay, let's jump into it, right? And John's out. No. So look, at the end of the day, and you brought this up. You're like, hey, DO, we have some of our members that are like, how come y'all don't talk about loan denials? I'm like, what are you talking about? Like, how come we don't talk about loan denials?
Because you shouldn't be getting loans denied,
dummy.
Because
you shouldn't be getting loans denied. Like, okay, end the episode here. But as you and I started going back and forth and you kind of wound me up like you do and you let me start going, I was like, actually, John, there's a great lesson in here for companies of mortgage, owners of mortgage companies, to branch managers, to rookie loan originators, and everywhere in between, right? Because what the layperson probably doesn't understand is that too many loan denials is a bad thing. Not enough loan denials is a bad thing, and loans going into default is a really bad thing. But having no loans going into default is a bad thing, just like having too many. FHA has this thing called the compare ratio. FHA compare ratio is basically comparing your company's defaults against my company's defaults against what is common and typical in our market. And if you have more loans going into default than the average, then FHA is going to have to look hard at you as a lender to see, do we need to pull John's company's credentials? But the same thing goes if the market has, I don't know, 2 out of every 1,000 loans going in a default, and I have 2 out of every 5,000, then I'm not necessarily better than the other company because I may be leaving money on the table. So when I'm talking about a company, if my compare ratio is too low, then I have to stop and ask myself, am I too conservative? Am I not saying yes to 4,999 loans because I'm afraid that one's going to go into default? Well, that's not fair to those 4,999 people that I didn't extend financing to because I was so afraid of having one go bad. I just chose not to do all 5,000. And that's what actually happens on the top level with mortgage companies is you'll get certain mortgage companies, banks, and lenders that are so conservative and so afraid of having a loan that they approve go belly up or go into default, go into foreclosure, stop making their payments, that they just choose not to say yes to hundreds, if not thousands of other loans. That's not good business. So every business has to mitigate for risk, right? If you are a auto insurance company, you're not trying to never have to pay out a claim. You're trying to only pay out as much in claims as you've taken in terms of premium, less a little bit so you can have some profit, right? That's kind of how insurance works. It's a long game. It's a game of chess for them as well. It's not that they're not trying to like take in $10 million worth of premiums to never have to pay out a claim. It's like, no, I want to take in $10 million of premiums as long as I only have to pay out $9 million in claims, and that $1 million is what their profit was for the year, right? That's insurance. Same thing works in lending. When I am a lender, I want to lend as much money to as many people as long as it's a well-documented, risk-mitigated decision. And I'm going to work into my algorithm that I know that 2 out of every 250 or 500 or 1,000 loans will end up going into foreclosure.
Is there like the sweet spot default ratio number? Like on average, your company should be, for every 10,000 loans you approve, you should deny like 50. Is there like a sweet spot that you could
for denying?
Yeah.
Well, let's get into denying in a second, but I will say, is there a certain sweet spot for loans that are going into like early payment default? That's what we call it, EPDs, early payment defaults. And as an originator, as an underwriter, as a branch manager, company owner, like you don't want them, but they kind of come with the territory. Yeah, I would say you'd want to keep your default rates less than 2%.
Okay.
Right? Like during the meltdown, default rates were 5, 6, 7%. That was catastrophic. But a 2% default rate is healthy.
Okay.
Yes. A 0% default rate, you would think, oh, that must be healthier. It's like maybe, but maybe not, because maybe we just weren't saying yes to enough people. So maybe we have far too few homeowners because we were far too conservative. So that's when it comes to defaults. And I'm saying loan denials. Loan denials works very similar. So what I did is I started at the top of the tree, and let's work it down. So I started with the company owner, but we'll work it all the way down to the originator.
Okay.
When you are originating loans and you've never had a loan denied, I'm going to make a bold statement that you haven't done enough loans. You have not done enough loans. Now, there's originators out there that are like, oh, no, I've never had a loan denied because I'm so great at my job, because I am thorough, because I'm smarter than an underwriter. I'm like, yes, but you're also not pushing the envelope. You're also not taking in as many opportunities as you should. And there's a slippery slope of if you've never had a loan denied, then you're not trying hard enough. You're not generating enough leads. Kind of like the person who says, I've never had a client not give me a 5-star review. I would say you're not doing enough loans. Now, I want your net promoter score to still be elite. I want you to have amazing reviews on Zillow and Google and Experience.com. But if you don't have 1 or 2 people a year that weren't through the roof satisfied with you, it's probably because you only did 20 loans, not 200 loans. You do 200 loans in a year.
Some Karen's going to pop up and be like, you suck.
Yes, you can't be all things to all people. Life happens. Mistakes are made. And I find that the loan originators who have never had a consumer complaint also don't do enough loans, just like a loan originator who's never had a loan denied doesn't do enough loans. Now, that said, denials should be the exception. They should never be the norm. So the exception would be this. Oh my God, I've never seen that happen before. I made an honest mistake, and because of that, we're turning your loan down. Or if a loan's getting denied, here's my preference. Every one of us knew about it going into it. Realtor knew about it. Borrower knew about it. Processor knew about it. We all knew about it going into it. So proper expectations were set. But we all knew we were going to give it our best. We were going to try our hardest. We were going to put as many stopgaps in place so that we didn't jeopardize the buyer's escrow deposit. And we were going to see what could transpire when we finally submitted it. And in today's day and age, you can avoid a lot of loan denials because if you ever have one of those situations, most investors, most mortgage companies allow you to do what's called a TBD underwrite. That's when I can submit your entire file without a property and have your income and your assets and your credit reviewed. So I don't have these questions. But mistakes happen. Things get missed. Things get non-disclosed. Things get found during the underwriting process that ends up denying your loan. So I would tell an originator, if you're funding 100 to 200 loans a year, I bet you have 1 or 2 that get denied.
Every year?
Yeah, every year.
Every other year, okay.
Now, if you're a loan originator and you're getting a denial a month,
let's go.
You are not good at your job.
I want to help all borrowers, Dustin.
You are not good at your job.
Can you lose your license if you get mad denials back to back, or there's some people that just
you'll get fired. I would fire you.
Right.
Yeah, I'm like, what's wrong with you as an originator that you're submitting? We have the saying in the mortgage industry: garbage in equals garbage out.
At what phase? Because I'm not familiar with the process. So how deep into the process are you denying somebody? It's like, hey, I submitted all their docs. I pulled everything.
That's a great question. That is a great question. So for me, a denial means I told you, yes, I can as the originator. And the underwriter said, no, you can't. That to me is a loan denial. A loan denial, and I'm sure if we got technical, the technical answer is way different than the street answer. I'm giving you all the street answer. This is how it works in real life. If you come to me, John, for mortgage pre-approval and I look at your credit, I'm like, bro, there's no loan programs for you. Like, to me, that's not a loan denial because I never took your formal application.
Okay.
And I never told you, yes, I could. If I said, hey, John, before I give you a pre-approval letter, I'm going to need for you to submit to me your income taxes so that I can see how much income the underwriter is going to let us use to qualify you. You send me your tax returns. I'm like, bro, you took a $100,000 loss last year. You're like, yeah, it's great. I didn't pay any taxes. I'm like, cool, but I can't do a loan for you. That's not a denial.
Gotcha.
Like, a denial is straight up, I, as the originator, put my name, put my company letterhead, put my NMLS number, and said, yes, I can go shop for a house. Yes, I can. Let me submit you to underwriting so we can get you closed in 3 weeks. And the underwriter comes back and says, no, he can't. That's a loan denial in my world. And I'm happy you asked the question because I probably needed to clarify that a lot sooner. But if you're an originator and you are getting a loan denied monthly, you have to have a long, hard look in the mirror. Like, you should not. Like, that's your brand. That's your reputation. Like, you can't go around like expecting that you're going to throw shit against the wall to see what sticks.
Yeah. What are the most common factors? Like, person had like a 112 credit score, or like they quit their job the day before. Like, is always like a gotcha moment that the loan officer didn't like catch? Are there some?
Yes, it's always the LO's fault. Not always. Always is a strong word. Okay. There are times when, look, nothing showed up on the credit report, but when it went to underwriting and underwriting did some of their data verification, they noticed that there was an actual mortgage that is actually in default that wasn't showing up on the credit report that this person is legally responsible for. Well, I, as an originator, am supposed to ask all of the questions on that IRLA, but too many times as a loan originator, I let the person fill it out electronically and I never go back and review it with the person and make sure that they know what all those questions mean. Right? Like, I once had a loan denied when my borrower finally submitted his paycheck and we saw that he had child support on coming out of his paycheck.
What the hell is this?
This was a guy who was 24 years old, been married for 3 years, and had 2 kids. Why did I think that he had child support?
Started smashing early in sophomore year.
100%. That's what happened. 100%. Yeah, got his high school girlfriend pregnant, and it was only like $160 a pay period that he had to pay, but that was the difference of him qualifying and not qualifying.
Oh, wow.
Now, on his loan application, it says, are you obligated to pay alimony and child support or separate maintenance? The box was checked no.
Yeah, so what?
But do you think I went through all those questions with him, or did I have him apply online and he checked the box and we moved on?
Right.
When the pay stub came over, did I look at the entire pay stub, or did I just check his hourly rate and his hours, make sure the income was there, and I moved on? I didn't look for his deductions. I, as a loan officer, could have caught this, but I didn't. I didn't ask the right questions. I didn't review all of the information he had submitted to me online. And I didn't do a good enough job of actually looking at the pay stub thoroughly. So extreme ownership says I am to blame, not the client. He doesn't do this for a living. I do this for a living. But I didn't do it. So the loan ended up getting denied. It got denied a week before closing. Pretty confident that listing agent only puts, the word F in front of my first name. It's usually effing.
Yeah.
Pretty sure that the buying agent never referred me again, and pretty confident that borrower would never call me for a loan.
Now, when it's denied, who is someone out of like cash? Like, so the company's out of cash because you pulled credit. Is like the borrower or anybody else at risk?
It all depends. Like, yes, I mean, the borrower spent money on a home appraisal. It spent money on a home inspection. Potentially, they have an escrow deposit that could be $3,000 to $30,000 as a deposit on the contract. Are they going to be able to get their money back? Usually, they can. Right? Usually, there's a financing contingency that allows them to get their money back.
Okay.
But yeah, it's not a pretty scene. That was a learning mistake. Right now, when that happened, I was funding 144 loans a year. Right? I was probably really busy that day. I was maybe trusting instinct and going off gut a little bit too much. It was an honest mistake. Like, things happen. But normally when it comes to loan officers who are having multiple denials, they're not asking the right questions. They're not verifying the information. So there's no data integrity. I'm all about data integrity. Right? Like, I can run something through automated underwriting. It'll give me an approval. But if I don't have like the right data and I haven't verified the data, a lot of times they just don't know the guidelines. I'm like, how do you not know the guidelines? They're online. You can print them out and take them home and read them all weekend. Or they don't know how to calculate income, or they take their borrower's word for income. Never take your borrower's word. Like buyers are liars, right? They don't lie on purpose. They lie because they don't know any better. I mean, I've had someone tell me that, that they only make X amount of dollars per year. I get their pay stub. I'm like, bro, you make way more than this. He's like, yeah, but that's all I see in my direct deposit. I'm like, okay, well, in my world, we go off of gross income, right? I've had someone tell me that they get paid twice a month. So I did their pre-qual off of twice a month. Really, they got paid every 2 weeks. Well, to this person, every 2 weeks is the same as twice a month. Yeah, except for
the months that have 3 pay periods.
Yeah. So you end up having a whole nother month of quote unquote pay, which was the difference of someone being able to qualify for $330 versus $300. Like that was a big difference. So I, as an originator, had to learn that it's shit in equals shit out. I have to slow down, take a deep breath, verify the information that I'm using for my pre-approval, document it, ask the right questions. And if I do so, I should literally have 1 or 2 loans denied out of every 200 I submit to underwriting. It should never be every 3, every 5, every 10, even every 20. And when that happens, that tells me that there's a massive training void when it comes to the originators that are taking the loan application and submitting it to processing. So, the moral of the story is this. If you're running a company and you're not having enough loans that end up going into default, you're not taking enough risk and you're leaving money on the table. Now, if you have more than your fair share of defaults, no, you have to tighten your credit box and you have to do some training with your underwriting staff. If you're an originator and you don't have enough loans that are being denied, you're probably not doing enough loans. You're not taking enough chances. You're not bringing in enough transactions. You're cherry picking too much. But if you're doing too many, then you're not good. And it's okay to not be good, but it's not okay to not do anything about being good. So you have to figure out how to slow down, learn your craft, learn how to calculate income, learn how to ask the right questions. Make sure you have data integrity, utilize all of your resources before you tell someone that you can do a loan for them.
Well said, Dustin.
And that right there is the basics of understanding the slippery slope of loan denials, as well as loans that go into early payment default.
Well said. I couldn't have said it any better myself because
I'm not even going to ask you to.
Thank you.
How about that? You're still worried about being denied by UCF.
That was the best thing. I mean, it was better. It was good that I didn't go to UCF. Remember that reality show, Big Man on Campus on the WB?
Yes. Was that during your time?
That was I remember I was like, there was a kid that was like featured on that show.
And that was at UCF? Mm-hmm. And good thing you weren't there because you'd have been with that guy. And you would have been featured on WB.
For the wrong reasons.
For all the wrong reasons. Yeah. Plus, it's probably good for you because you had to get away from your mom and dad. Like, they were too close at UCF.
I know. Eckerd, it was horrible, though. I mean, it was good, but too many hippies, barefoot motherfuckers walking around out there. It was a great experience for a while. But University of Tampa is where I should have been. That led me here to you, Dustin. And look, we're just shaping the future of the mortgage industry. Speaking of shaping up the future of the mortgage industry, John, let's find a way to put a bow on this episode. For those of you tuning on YouTube, thank you. We ask you to hit like and subscribe. For those of you listening to us, thank you. But we also have a YouTube channel. Did you know we have a website called TLOPonline.com? I write a newsletter every week. I write that shit, not ChatGPT. It's a 3-minute read. It's probably great for loan originators, one-to-many. That's something we preach over here at TLOP's MLO coaching community. Speaking of coaching, if you're out there looking for coaching, sales training, or business advice, our doors are always open and we will not deny you. So head on over to tloponline.com, start clicking buttons, and someone from our team will reach out to you. That's all the time we have for you today. He's Dustin Nolan. I'm John Coleman. We look forward to seeing you on the next episode. Peace.